Good day everyone! So for today's video, we are going to talk about some important topics in banking and financial institution. We have here compliance management, corporate banking, internal audit, and BSP or Bangko Sentral ng Pilipinas, Philippine Financial System. So let's start! Compliance management is a crucial process for organizations to ensure adherence to regulations and ethical standards. It involves establishing policies and systems for regulatory compliance, protecting against liability threats and attacks, and maintaining industry ethics. Compliance management comprises activities such as control and risk assessment, monitoring, evaluation, audit training, and reporting. These components enable the organizations to manage related risk effectively. Benefits of a compliance management system include increased efficiency through automation, improved visibility via real-time dashboards, and report cost savings from process automation, and avoiding fines and risk reduction to protect an organization's reputation. The key elements of an effective compliance management includes defining compliance requirements, establishing policies and procedures, monitoring and auditing, reporting and remediation, and thorough documentation. There are two main areas involved in workplace compliance: the corporate compliance and the regulatory compliance. Corporate compliance is the way of an organization to ensure that the employees comply with internal policies, procedures, rules, as well as performance and behavioral standards. Regulatory standards is the vice versa of corporate compliance, wherein it is a way of the organization to comply with the external laws, regulations, and rules. There are three main approaches to compliance management: the strict top-down approach, shared or distributed model, and hands-off approach. The strict top-down approach is a strong authority figure enforces the rules throughout the organizations, while hands-off approach is the flexible approach to compliance management. The authority figure has set some high-level guidelines, but the procedures are left up to employees to figure it out. Of course, you can break the law to accomplish your goals, but when it comes other benchmarks, there's still some flexibility. Shared or distributed model, from the word itself, this means work together and shares the responsibility to make compliance their priority. Rather than receiving high-level guidance from authority figures, the group shares the responsibility for achieving and proving compliance. It's the we're in the together approach. Corporate banking is a division inside the bank, and this covers accounts that are corporate in nature. Clients in corporate banking are mostly coming from corporations, not an individual. Corporate banking refers to the aspect of banking that deals with corporate and other business customers. Corporate banking is important as it plays a vital role in supporting financial health and growth of a business by providing essential financial services, managing risk, and offering expert guidance in complex and dynamic financial environment. Corporate banks benefit from industry-based categorization to better manage risk, offer specialized services, and comprehend and meet the particular demands of their clients. It's a sensible strategy for streamlining their business processes and optimizing their clients. Some services corporate banking offers include cash management, lending, commercial real estate, private equity financing, treasury support, and trade resources. There are few different segments of corporate depending on the needs of a company. Here are the following. Deposit-taking institution or corporate banking depends on their institution to receive deposit from business, hoping to earn through interest. While mortgage firms that fund mortgages for borrowers and look for potential clients that need funding. The next one is central banks and monetary authorities. This institution helps to manage allocation economy by regulating and supervising commercial or retail banks with the goal of reducing inflation and establishing the currency. Other financial institutions are often called shadow banks or independent lenders, perform the same function as the bank but are not banks. Brokerage firms are the one who facilitate transactions between two companies. Last is the financial technology or fintech is a combination of technology tools and resources that corporate banking uses to differentiate itself from the competition and traditional ways of banking. Internal audit is an activity within a company or organizations. It involves checking and verifying financial statement. Internal auditor check and verify all the transaction on how to generate income and expenses. Internal audit is important to avoid money-related crimes such as money laundering and fraud. Internal audit is not just all about financial aspect, it is done to improve the performance and efficiency of an organization. It includes ethical behavior, procedures, and other aspects in the organization that needs improvement to improve the flows and how to run a company as a whole. Internal audit is a function within a company that involves risk management or managing risk. It also deals with the company internal control system deficiencies, processes if it is implemented or not. Internal audit is important to interstock like banks. It is a requirement to have an important department like internal audit because this department plays a crucial role in long-term growth of a company and to its success. It is important for the banks in able to continue the development, have a continuous improvements on procedures and policies that will lead to a customer satisfaction. Internal audit reports are often known for adhering the 5 C's reporting requirements. A complete sufficient internal audit often ends with a summary report that communicates answers to the following questions. The first one is criteria. What particular issues was identified and why was the internal audit necessary? Is the internal audit in the preparation for a future external audit? Who requested the audit and why did this party requested the audit? Condition. How was the issue in relation to company target or expectation? Does a company have a policy that was broken, a benchmark that was not met, or other condition that was not satisfied? Is the company confident to issue exist or do they believe an issue in hand? Cause. Why did the issue arise? Who was involved? Was the process were broken and how could the issue have been avoided? Consequences. What is the outcome of the problem? Are issues are limited to internal matters or the risk of it in external consequences? What is the financial implication of the issue? And the last one, corrective action. What can the company do to fix the problem? What specific steps will management take to resolve the issue and what type of monitoring or review will occur after solutions or solution have been put in place to ensure a fix have been implemented? There are also different types of internal audit, the internal financial audit, operational audit, compliance audit, environmental audit, IT audit, and special one-time circumstances. BSP or the Bangko Sentral ng Pilipinas is the mother of all banks. The primary objective of the Bangko Sentral ng Pilipinas is to maintain price stability, conducive to a balances and sustainable growth of the economy. It shall also promote and maintain monetary stability and the convertibility of peso. The BSP has an exclusive power and authority to issue the national currency. All notes and the coins issued by BSP are fully guaranteed by the government and are considered legal tender for all of private and public debts. That's all for today. Thank you for watching.